Alright guys, what's going on? This is Ryan, aka Kenner and Clark. 2 days in a row of videos. We're going to be trying to do these as much as possible. And I want to talk about a few things in this video. I'm going to try to keep it brief. Alright. I want to first touch on what I said this morning, which generated a little bit of confusion when I said that I would be longing my longs at a certain point. And I wasn't speaking in hyperbole. I wasn't being overly enthusiastic about opening up a long position. I'm talking about something that anyone who is experienced with the derivatives platforms, they understand this already, but if you're new, you might not understand what I meant. And this is something that is unique to these contracts, all right? As an example, if we're trading stocks, for example, we're trading Forex or commodities, all right, the margin that we put up, if I'm in the United States, it's likely going to be in USD, right? So if I am opening up a margin account on something like TD Ameritrade and I get 3 times leverage, all right, my margin is in USD. All right, if I'm opening up a Tesla position, or rather opening up a long in Tesla, I'm benefiting from Tesla going up. All right, I'm not margined in Tesla to trade Tesla, okay, which is essentially what we have with trading Bitcoin. All right, when you're opening up a long position in Bitcoin on these platforms, all right, on the exchange that is margined in Bitcoin, you are already long that margin. So your margin is going up in value. Your underlying spot that you have on the exchange is going up in value, and whatever notional contract value you have open is going up as well. So you are long in more ways than one, and that's what I like to point out, and that's what you'll see us joke around and say that you are longing our longs in this case. All right, and this is something that's unique, right? Because your underlying is your margin. All right, and when Bitcoin goes up in value, the USD value of that margin is going up as well. So this is something to keep in mind, because also when you're on these platforms, if you're not in synthetic USD, you are also already long the spot Bitcoin. So keep this in mind. This means that you don't always have to be in a position on the platform, because you are already appreciate or riding along with any positive price movements, all right, in the underlying on any of the spot exchanges, because you're already long. You put your Bitcoin from a spot exchange onto the derivatives platform. You are already experiencing any type of return of beta with the asset, okay? So this brings me to my next point, which is convexity, all right? And convexity has to do with the nonlinear relationship between the spot and the derivatives contract, all right? So when we're talking about convexity, what we're talking about really is acceleration or deceleration. So you'll hear convexity or gamma. All right, if we're talking about options, we're talking about gamma. Normally with convexity, you'll hear this talked about with bond prices and yield. But with Bitcoin, when we're talking about convexity, we're talking about whether your return profile, whether your upside is occurring, upside meaning a favorable position, is occurring at an accelerating rate or a decelerating rate. And on the flip side, whether your downside, okay, or an unfavorable market movement is occurring at an accelerating rate or at a decelerating rate. So just to give you an example, all right, this is why you absolutely have to use stops, okay? Shorts benefit from positive convexity, all right? Just to give you an idea of why this is. Now, when I am, again, unique to these platforms, margined in the underlying asset, let's say I open up a short position. All right, I open up a short position and I'm using Bitcoin to open up that position. The margin that I'm putting up is Bitcoin. So if I'm in a short position and price is moving unfavorably against my position, I am experiencing a loss, but my margin is increasing in USD value as I'm experiencing that loss. So I'm experiencing a loss at a decelerating rate, all right? The opposite can be said for a long position. This is a negatively convex trade. So what this means is that upside is experienced at a decelerating rate and downside is experienced at an accelerating rate, all right? So if I am long 20,000 contracts and Bitcoin is, let's say, $10,000, all right? This is relevant to where we currently are. So let's say that I'm long 20,000 contracts. Bitcoin is $10,000 for simple math. I am long 2 Bitcoin, all right? If Bitcoin goes down to $5,000, I am now long 4 Bitcoin. So my losses are occurring at an accelerating rate. So think a bit about this as, I heard someone talk about this. It's actually Nagol Kulahan. He's the CFO of Quest Partners, which is a short-term quantitative CTA based out of New York. And he talks about convexity as a car being able to accelerate or decelerate when it's approaching a barrier. So when it's approaching the point at which it's going to crash, when it's about to crash into something, just put it that way. So positive convexity is when we're approaching that wall, for example, we're able to decelerate. All right, so our return profile or our losses are occurring at a decelerating rate. So it sort of dampens the loss, right? So this is important because if you are short Bitcoin and the price is moving unfavorably, if you're stopped out of the position, at least price continues to move up, you're sort of making up for that loss in USD value, right? Because if price continues to move upward, at least you're stopped out of that trade, and the USD value of your underlying spot Bitcoin is increasing in value now. So you can understand how this is beneficial. So keep this in mind, all right? You have to understand how these contracts are structured and how being in certain positions can either be really detrimental, all right, if they're moving unfavorably, such as a long position, and this is why you can get liquidated a lot faster, all right, or they can be somewhat dampened if they're moving unfavorably, such as being in a short position. All right, and the same can be said as moving at returns increasing at an accelerating rate when you're in a short position, all right, for the exact opposite case that we talked about when we were talking about being in a long position. So the next thing I want to get into is strength and microstructure, all right, and we mentioned this on BlockRoots 2 days ago, shared this image, all right, we talked about the week of February 3rd, the point of control, which again is where the most amount of volume took place. Okay, so we talked about looking for strength in microstructure, and I gave this little legend at the bottom, which again is way too precise. We're never going to see this in the market. We're never going to see price really respect areas. It's going to be something that you're going to have to identify and give it a little bit of wiggle room. All right, you're going to have to expect that it's going to require a little bit of room to breathe. So there are certain patterns that we're going to be paying attention to. And again, if you guys watched the video yesterday, you likely understand what these patterns imply if we're talking about something moving favorably for longs. What they imply, all right, and the opposite applies if we're talking about those upside down, is they imply that there are trap traders at some point, okay? Or there are traders in positions that, again, are going to be able to be pressured. So one of the things we talk about when we talk about strength and microstructure is the same thing that we talk about on a macro scale. So when we're talking about a macro scale, what are we talking about? We're talking about a series of market structure. We're talking about being in ranges, for example. We break out of the range, or you retest the high of the range, and move favorably upward. And we have a series of what? We have a series of price moving, in this case, north, and we're creating a pattern of higher highs and higher lows. This is on the macro scale, right? Now, on the longer time frames, it's actually more difficult to predict where price will be, all right, further out than it is to say predict where price will be in 5 minutes from now. So lower time frames might be a bit more noisy, but they are a little bit more predictable, okay? So the same sort of fractal nature that we talk about across, you've heard, how markets are fractal plenty of times. It's not something that we need to get into because sometimes there's too much homage paid to this, or there's too much credence given to this, and people mistake patterns as being actionable all the time because it paints a flag on this time frame and it's worth trading. So therefore, if it paints a flag on any time frame in any condition without any kind of understanding of context, that it's always something that you can apply in a very cookie cutter sense. But what we look for on the lower time frame is the same thing that we look for on the higher time frame, and it's just a matter of control, right? If, for example, we see that, I'm just going to take out my drawing tool and use this line right here, for example. We see that price is coming into support and it breaks down, right? Comes back up to support and now it's acting as resistance, okay? This is clearly an indication that in this time frame, right, depending on where we sit within market structure, that sellers are control, all right? They're clearly in control right here. All right, this micro support in this case was unable to be maintained, okay? Now, understand that obviously what occurs on the lower time frames, all right, cumulatively, when you add all this up and we have a bunch of favorable actions occurring on the lower time frames, this is going to yield to a larger time frame picture, right? It's going to be painting a structure that is positive as well. So if we see there's a bunch of lower highs leading to, or series of higher highs and higher lows in a lower time frame, and we just extrapolate that moving forward. It's not something that you should do, just extrapolate, but you understand what I'm saying. This eventually makes a structure that appears to be on the higher time frames as it would look on the lower time frames, right? That's what we're talking about when we say that there's a fractal nature to the way that we observe price action on lower time frames and higher time frames. So when we're looking for strength in microstructure, all right, imagine that this was that, let's say, 3-month range that we were in. All right, you wouldn't know unless you had a timestamp on this or some type of time frame visible that we are looking at a lower time frame chart or a higher time frame chart. We could begin to discern where control is within this chart. All right, you could see that at some point this was support. All right, again, at some point this was resistance up high. Okay, and again, my drawings are maybe a little bit more loose than they should be, so I'm going to take out the drawing line. Okay, so let's just say here's a clear high. All right, here are your lows. All right, midpoint within the structure. Stand this moving forward. Let's just redo these again because it's a horrible, horrible drawing. Okay, focusing on these lows. What I want to focus on is these lows and this structure right here. Okay, so this looked like it was the low to maintain. All right, this low right here. Don't worry about how far I'm extrapolating these lines because all I'm trying to do is just mark it up. I should probably get better at these drawing tools by now, but I absolutely suck with them. So let's just do this. Highs, okay, highs, lows, your lows. All right, the anticipation is when you're holding a certain area, when you break down from it after consolidating, there's going to be continuation. So strength in microstructure, what we're looking at within this pattern is price breaks down through this low and it fails to break lower, and what we see is price actually makes its way back up. All right, it makes its way back up within this micro range that we had. Okay, and maybe it is time to take these drawing tools out to redraw them. All right, price actually does break up at least to the midpoint of that range, and we're starting to see that buyers are gaining control. All right, what you want to be looking for on the lower time frames are cases where you have something like this, where you have, everyone is familiar with the swing failure pattern, where you have, let's say, some type of range that forms. Okay, in this case, we broke down from a range, and now, in this case, let's say we break back above, and we're successfully retesting the high of the previous range that we broke down from. That, when we, let's say, came back up to it, I didn't draw it in this one, but let's say we came back up to this range and unsuccessfully retested it before breaking further down. So strength in microstructure would be overtaking a level that was significant within this lower time frame. And this is where we begin to see things reverse, right? We're going to begin to see reversals happen on the lower time frames before they can, again, be painted on the higher time frames. So these are the things that you want to be paying attention for at significant supports and resistances. So when you see that we come into, let's say this line is our support, you come into support, we break down below it, it's acting as resistance, and then we break down but then manage to close back above it. Well, this is a sign of strength on the lower time frame. And this is exactly the type of thing that you need to be paying attention to really put any type of weight towards, in this case, taking a long off of this support. You're not just going to take a long indiscriminately because we're at support. You need to see that support is actually acting like support, okay? And not only do I want to just look for price maintaining or retaking a certain level, and in this case, it's a level within microstructure, I want to see that when we broke down from this level, all right, so down here, I want to see that this area was aggressively sold, all right? I want to see that there was really no initiative buying down here, that there was really just aggressive selling, okay? So by aggressive, I mean that we have traders market selling and hitting into bids, okay? And if we have very aggressive selling, we have a recipe for trap traders, all right? Especially if we have pronounced, very aggressive selling, but no further follow through with price, all right? Now you have aggressive selling down here. Let's say we have a very negative value in delta, and now price is back above this area where this aggressive selling took place. And again, you want to make sure that these are positions to open and not to close. So we're not just talking about longs closing out, not just talking about longs being stopped out or being liquidated. So strength in microstructure is the same type of thing that we look for on the higher time frames. All right, the same type of structure rather, but it's going to look a little looser, obviously. All right, things are a little bit cleaner when you're looking at 4, 6, 12, 24-hour bars, or in that case, daily bars or weekly bars. But again, the same idea remains, right? You lose a level, okay, or let's say that the popular swing failure pattern, for example, we come below a level, all right, you break a key level, and at this point your anticipation is continuation, all right. I knew that was going to come out like that, and I didn't want it to rhyme, so you're anticipating continuation, and in this case, we actually end up breaking below a key level. On the higher time frame, the better, but we break below a key level, and now we're back to closing back above it. And the strong case in this case would be if we break below a key level, we are violently rejected from this area, move back above, and now we are retesting the high of the structure in between. So these patterns are pretty simple to memorize, right? They're pretty simple to understand, but you could really add strength to them when you're paying attention to, again, something like delta, when you're paying attention to CVD, any type of interpretation of volume, in this case from one side or the other of the market. In this case, we're talking about shorts or aggressive shorts in this case, right? Because trap traders in this case, we're talking about shorts opening up. You don't really get any fuel when you're talking about the spot market, right? Unless you're talking about when price actually does move favorably up, you do have that sort of FOMO that does kick in from, in this case, anyone who sold over here on anticipation of price continuing down, and now they're thinking, well, my thesis was incorrect actually, and at this point they're probably entering the trade late, and this is why you have follow through in moves. This is why you have momentum in markets, because there's that delayed response and then that final jump from sideline traders, all right, into positions. So strength in microstructure, we shared these concepts and patterns on BlockRoots. I'll just give you an idea of what they look like again. Okay, the implication is the same. All right, you have a level, you've lost a level in this case, and we managed to close above an area that did act as support, did act as resistance, and now we're back above it. All right, it's basically just support and resistance flips on the lower time frame. And if they're moving up, it's showing that buyers are in control. Now, if they're moving up and we're seeing something like, I don't know why I'm putting an inflection on saying up. If you're seeing that price is moving up after moving down, but it's moving up on decreasing open interest, well, this is something you'd normally call a rally, or you'd attribute to being just a short covering rally. So when shorts take profits, they're buying, their positions are closed out. So that's why you have to remember that when you open up a short, you are a buyer, and when you open up a long on the derivatives platforms, you are a seller eventually. It's baked in at that point. So when you see that price is moving up but open interest is declining, this is an indication or possible indication that this movement upward is actually from shorts closing out. All right, and this can obviously, there's whole conversations that can be inspired from this, where you talk about how short squeezes can lead to longer time frame trends, because essentially you're just gaining the attention of market participants. But we'll save that for a later date. All right, hopefully this has been clear. The idea is the same. All right, it's support and resistance on the lower time frames. Okay, it's clear indications that buyers are in control. So we're talking about levels being lost, levels being regained, and if we can, substantiate those levels with an indication that one side of the market has overly committed in that direction, right? In that direction, we're talking about, if we're talking about trying to build a case for a long position, we're talking about shorts getting overly aggressive at the lows, all right, and then being trapped. So that's that, guys. Hopefully this has been very clear and concise. As always, exercise proper risk management and trade effectively.